These days, sadly enough, not so many people can afford to get on the property ladder solo. So buying a house with a friend can be a very appealing option. In this episode, I'm going to reveal my insider tips for the pros and the cons of buying a home with a mate. First, the pluses. Well, pooling resources with a friend can make home ownership much more accessible. A joint purchase increases your buying power and means you can consider a larger or a better located property than you probably could afford alone. Co-owning a property also means that you can split not only the mortgage payments, but the maintenance and the running costs too. You can both build equity in the home, particularly if the property appreciates in value over time. And of course, sharing the burdens of home ownership feels much less isolating. Inevitably, there are downsides to consider as well. Co-ownership can lead to disagreements or conflicts over money matters, property decisions, or indeed lifestyle choices. So it's essential to establish clear communication and a solid co-ownership agreement right from the outset. And I'm going to be talking more about what a co-ownership agreement is a bit later on. You also have to consider that when you own a property with someone else, decisions regarding it are not entirely your own, obviously enough. Selling, refinancing, or making significant changes to the property will require the agreement of both parties, which could limit your flexibility. There is also, of course, a financial risk. If one of you can't make the mortgage payments or cover the bills, the other may be responsible for making up the shortfall, and this could put a strain on the friendship and create financial difficulties for the person left to cover the costs. And finally, what happens if one of you decides they want to sell up? It does happen. Well, navigating the process of buying out the other person's share or finding a suitable replacement co-owner can be challenging, to say the least. So the first step in buying a house with a friend is to establish a really clear understanding of your respective financial contributions and different responsibilities. Having a clear and transparent conversation about finances from the outset can prevent future misunderstandings and disputes. One important decision, of course, is the kind of mortgage that you'll take out together. And I strongly suggest that you talk to a professional mortgage advisor who can help you work out what's best for your needs and different circumstances. To make this easy, we've added a link with this episode that will connect you to our recommended mortgage advisors. For instance, you might have a joint tenancy mortgage where both parties own an equal share of the property. If one owner passes away, their share automatically passes to the surviving owner. Or if one of you has greater financial resources, you might decide on a tenancy in common, where each of you has an agreed percentage share of the property, not necessarily 50-50. If one owner dies, their share can be left to someone else. What's important, I think, is to create a co-ownership agreement. This is a legal document that outlines the rights and responsibilities of each party in the property purchase. This agreement should most definitely cover the ownership structure, for instance, joint tenancy or tenancy in common, the percentage of the property each person owns, how ongoing expenses will be divided, the process for resolving any disputes or making decisions about the property, and what happens if one party wants to sell their share or if the property is sold. So, having a comprehensive co-ownership agreement in place can really help prevent disputes and ensure that you're both clear on your rights and responsibilities. It really is important. You'll also, of course, want to protect your investment, perhaps by taking out life insurance or income protection insurance to ensure that mortgage payments can still be made in the event of death, illness, or job loss. You should each make a will that specifies what happens to your share of the property in the event of your death. And I'd advise committing to regularly reviewing and updating your co-ownership agreement to ensure that it remains relevant and accurate at the time. With these steps in place, there's really no reason why buying a place with a friend can't be a great option for getting on the property ladder. Make sure you're subscribed to this channel and do join me next time for more great property tips. I'll see you then.